All right. I did say it was pattern trading Monday, and we're going to look at stocks, bonds, currencies, and commodities real quick. Not a lot has changed with the markets from last week to this week when you look at the overall markets. I do want to share with you the changes. I opened up SPY, and what we're looking at here is just the bottoms for the multi-month lows down here around 490. We had that pullback to 490 back in April. As you can see from there, we've had that run up. We continue to run higher, all right? Even in light of the, I want to call it multi-decade news that happened over the weekend, the assassination attempt on the president. Not a lot changed with the S&P. It's up a little bit higher this morning. All right, it has not hit Friday's highs yet, but it's very close. We're well past the target of 550. All right, we're in the 560s right now. Next target we're looking at is just above 580, although I still believe it's going to take some time for 580 to come out. We will see where that ends up at. It does have to do with a lot of what these next three charts are telling us. And the first of those three is the bond market. Bond market is still on track to move lower. We did see bonds moving lower into the pre-market session and session today off of last week's highs. Not that much, but we are on track to see bonds move lower. I think bonds could come down to 87.50 and it would not disrupt the stock market at all. But if bonds move below 87.50 and we move into the mid 80s and we move into the low 80s, I do think that could put some risk on the up moves that we're seeing in the stock market, because that just means that interest rates are going to stay persistently high or possibly even higher. We'll see where the charts tell us to go, but right now we've kind of made that move up to 95, and we're starting to move back lower. Next chart that I think is just as important is UUP. This is the double dollar cash index for the US dollar. It's measured against a basket of securities. And what we're seeing is this resistance becomes support line here at 29.50. We've seen the high up here. 28.50. We've seen the high here just above 29. We have an upside target of close to 30 on UUP. If that happens, then that's telling us that the dollar's getting strong and that it could affect stocks and it could affect commodities. The other chart that I want to show you, and it's really kind of one of two, is here's what's going on with oil and USO. We had that ending at seasonal bull soon. Well, that ends today, all right, coming just off those highs that we saw last week in the 80s. And GLD is continuing to surprise us because it has hit new all-time highs again. I literally put this chart up before I got started, and we've already crossed 225 and change. New all-time highs for gold, new all-time highs for GLD. In fact, our expectations is that we see GLD hitting 250 sometime later this year, right? But again, I have support right now down around 210, and that is the area that we saw lows in April and May. We did get down into around the 212 area in June, but that is all behind us now as gold has moved higher and more smart money seems to be moving into gold and moving into GLD. All right. I would be remiss if I did not talk a little bit about what happened over the weekend. In fact, over the weekend, I can tell you from Saturday night until this morning, I can't really remember much of what I did because my eyes were glued to the news. And so, this is I snapshotted this latest news, that Biden's condemning the violence, urges America to lower temperature. We all know what happened. You had to be under a rock not to see what transpired since Saturday at around 6:11 or 6:12 p.m. Eastern time. But what I want to do is I want to talk about this and put it into forms of pattern trading, right? This is This is a news story, regardless of where you sit in the political spectrum. This is a news story that is, I would say, a multi-decade story. I mean, this fits right up there with, when I think of news stories like this, I think of 9/11. I think of stories that really shake the country. And what I want you to take away from this is that, let's take a look here at the stock that coming into this morning was most affected by this news, and that was DJT, Trump Media and Technology Group. Now, I'm a pattern trader, okay? So I don't trade on emotional, I don't take emotional trades. I take trades based on patterns, repeatable patterns. And the repeatable pattern that we've seen with stocks like DJT, because this is in all circumstances a meme stock, and meme stocks tend to get very emotional, and traders that trade that emotion usually are on the wrong end at the wrong time. Take a look at the bullish gap on DJT. This was earlier this year. We saw that bullish gap that pop up, and you're talking about from one day to the next going from about $40 to a high of near 80. All right, 40 to 80, and then the collapse that took us right back down to below 30. Now, I talked about this then. I actually went bearish on this particular trade then. And so we can see what's happened here, from that move down. Well, look at what happened over the weekend after the failed assassination attempt. We were looking at DJT. In fact, I was actually, I was trying to get long DJT a week ago, and it just didn't happen because I was looking for a limit that never got hit. All right. So, today I pulled that off the table because the move happened. We were up, we closed just above 30 on Friday. In pre-market trading, DJT was at $50. It opened in the mid 40s. And as of this particular chart, it was at 41.54 when I snapped this. We were in the high 30s when I actually started talking now. And so you can see that emotion, that emotionally charged move where a lot of emotional traders went in and bought this. Some bought in the pre-market. I think they're regretting that decision right now as it's down more than 20% from those highs at pre-market trade. Buying it at $45 during the market open, the normal hours, you're down 12.5% from that move. It's a volatile stock coming off of the volatile news that we saw this weekend. And the other thing I want to show you is this. Here's the other chart I want to show you. So is this pattern happening again? Well, it seems to be the case. Here's the other thing I want to mention. The options from Friday, the short-term options, these are the options that expire 1 week or less. All right, from Friday, they doubled in value. All right, so if you look at this red line here, these options were trading around 104, 105. This morning, they opened at 210. That is a double. 105 to 210 is a double in options implied volatility. Now, what does that mean to an option trader? Well, it means in all cases, and thinking about this in rough terms, that if you had time value in an option, and let's just call it 3 points worth of time value, it jumped to 6 points worth of time value from Friday to today. So time value in options roughly doubled in value. So you're now paying twice as much for the same time to expiration on a near money option than you were on Friday on DJT. So think about this more as a buyer. Let's say you go shopping, all right, and you're looking at a pair of jeans, and all of a sudden, last week, those jeans were selling for $50, and this week in the same store, the same pair of jeans are now $100. You probably wouldn't want to buy them. You're probably going to think, I'm going to wait until they maybe come back down to 50. And I want you to think about that as an option trader as well. So takeaways for the overall markets. Think about this. Markets are continuing on their track and projections for July. When you look at stocks, bonds, currencies, and commodities, nothing has really changed. This weekend, however, sparked a very emotional trading day coming into today. All right. It might be the reason why gold is at new all-time highs. However, I'm going to mention this. Last night, gold was off. Gold was off $10 an ounce because cash was higher. That changed between Sunday night and Monday morning. So, because of the emotionally charged weekend, which started in an emotionally charged Monday, emotion, I want to let you know, I want to remind you, emotion is the biggest enemy of a trader. As a rules-based trader, we don't trade emotion. The best way the best thing to do in cases like every case I can remember where there was huge emotion out there, the best thing to do was either fade that emotion or stay on the sidelines and wait for the emotion to subside before trading in an emotional stock.